Good morning, everybody. Welcome to one more session of our webinar series, this time dedicated to the electronic invoicing trends in Portugal and worldwide. My name is Fernando Pereira. I work in the product management department here at Sovos Saphety in Lisbon, and I'll be covering the Portuguese perspective of this topic. And I have here with me Christiaan to cover the worldwide perspective and global trends. Christiaan, please present yourself.
Sure. Thank you. So I'm Christiaan Van Der Valk. I'm a Vice President of Strategy and Regulatory at Sovos, and I have the honor and privilege of presenting some of the trends in e-invoicing on a more global level right after Fernando.
Thank you. For those not aware that Saphety was acquired by Sovos in 2021, together with Petapallet, so we are not part of the Sovos family. So in terms of worldwide presence, Sovos is in 15 different countries, different offices over the world, from Latin America to North America and Europe. In terms of the topics for today, I will be then with this electronic invoicing in Portugal, and Christiaan will cover the global trends. So, starting the Portuguese situation, I decided to present you with regulatory landscape of the country, and basically to show us where we came from and where are we now. So this started back in 1999, last century, where this first regulation was introduced in order to make the electronic invoices equivalent to what are the paper invoices, or what were the paper invoices at the time. But actually, this was not the introduction of the electronic invoices on the country. A very long time before that, there were already being exchanged electronic invoices in some industries like retail, automotive, and due mainly to the process optimizations and cost reductions. But of course, in the end, the paper invoice also needed to flow because it was the legal representation and the only legal representation of the invoice. With this law back in 1999, this step was no longer needed. Of course, it had to respect the conditions of this law that stated requirements in order to archive, in order to provide authenticity, legibility of the invoices. But it was already a way for these companies to not having to print the invoices and do these manual processes. But this law did, in fact, created any electronic invoice wall or wave, at least in a representative manner, because at the time technology was not mature, and only the ones already doing this in this specific industry that took advantage of this law. But it actually was the first configuration of electronic invoice in Portugal, and introducing what we call the post-audit model in the country. This is the model that we are now, but that means that electronic invoices are exchanged between the parties and there is no actual intervention from the tax authority in that process. Of course, later on, tax authorities can demand auditing all those exchanges, all those invoices, and they have to be kept in a certain conditions in order to maintain its authenticity and non-repudiation, legibility. So that's why we are considered still a post-audit country. So just going forward a little bit, then a major milestone in 2011, the introduction of what is named the certification for the building software. So in Portugal from 2011, only certified software by our tax authorities are allowed to issue invoices, not specifically electronic, but any kind of invoices. And that, of course, was a disruptive factor in the country, because all the ERPs had to be adapted to this new legislation, and of course it affected not only taxpayers but also software providers, ERP manufacturers. And then in 2013, another major milestone, the Saphety was made mandatory to be reported on a monthly basis. It was introduced back in 2008 on an on-demand manner, but in 2013 it was made mandatory for companies to submit it on a monthly basis. Saphety is a reporting document that collects all the data regarding all the transactions made in the certain ERP, and Portugal was actually the first country in the world to adopt the Saphety standard, and standard from OCDE or OECD in English. And we were pioneers in the introduction of this reporting mechanism. Now, little bit a jump in back to 2021, where the electronic invoicing with public administration entities was made mandatory for large companies. This is the adoption by our national law from the European directive that mandated these electronic invoices for all public administration in Europe. And it was our first phase of this adoption. The second phase was then introduced this year, already in January this year, where this obligation affected also the SMBs, small business companies. And this, of course, is also a major milestone in this process. And this obligation mandates the usage of structured invoices, not PDFs. PDFs are not accepted in this process. And ESPAP is the entity that determines what are the technical standards to be adopted in this process. Other milestones that I have there represented, you can see that the Saphety will have evolutions for the new non-resident, also being mandatory for them from January this year to be reported, and from 2025 it will be mandatory to submit the accounting Saphety also as a mandatory basis and an annual basis. My intention with this slide is to show you that tax authority is more and more adopting this digital technology, this digital process, in order to have a global view on the economy and fulfill his mission, which is to collect the right and due taxes in order for the benefit of us all. Okay. So looking to the B2G, the business to government electronic invoicing, we can see that since January 2021, the large enterprises are mandated to do it, and since January this year, the small and business are also mandated to do it. But as I mentioned previously, the PDF is no longer an option. It has to be a structured format, and the format determined by ESPAP is the same SPT format, XML based on the UEL 2.1. And this is the norm that has to be in place, and this is the accepted way to do it. Of course, the scope of this mandate is for public contracts, no direct agreements until below 5,000 euros are excluded of this obligation. And last year in August, there was a despacho from our government that introduced some confusion about these mandates for the SMBs. this despacho did not affect this date, as it did not change the public contracts law. That despacho just delayed the end of the validity of the PDF as electronic invoice, delayed until the end of this year. That law for the PDF was introduced due to the COVID pandemic. Now, giving you just an overview by segment where we are now, for the B2C sector, when we are considering electronic invoices to final consumers, at the moment they can be paper and PDF. Of course, PDF will have a special requirement starting next year. For the B2B sector, we can have the three options: paper, the PDF, or the electronic structured formats. And for the B2G, only the electronic structured format is accepted as a valid electronic invoice. And the obligations, as I mentioned, in the PDF will require qualified digital signature from January next year. This is until then, the regular PDF with no signature at all are still valid as electronic invoices. And the B2G, the same date I previously presented, so started this January, it will enlarge to all set of companies doing businesses with public entities. In terms of numbers, figures in Portugal for electronic invoicing, we can see that there is an increment, a significant increment starting in 2020. These are our internal, based on internal information that we have. There are no official statistics around this, but you can see there already in 2020 there was already 25 billion euros translated over electronic invoices, represented 29% of our PIB, of our GDP. But if you go forward to last year, 2022, that number raises to 89 billion euros, which makes 39% of our national GDP. It's a very significant number already. And in terms of number of electronic invoices exchanged, we can see that back in 2020, it was around 24 million invoices exchanged electronically, while now in 2020, the number raised up to 35 million. If we have a look in the perspective around sectors, we can see a huge prevalence of retail sector. That sector already have electronic invoice for a long time, even before it was legal represented. So they have here 36% of the quota by industry, but there are other sectors like automotive, public sector itself, industry. You can see some sectors are growing faster than the retail itself. Now, present you the Sovos Saphety numbers from these electronic invoices, the ones that cross our platforms. We can see also the same kind of growth that we saw for the Portuguese entire market. And we can see, for instance, that in 2020, it was around 31 billion euros crossing our platforms with 70 million invoices exchanged. And if you look at 2022, last year, it was already 52 millions, representing around 23% of our national PIB or GDP. So these are the safety numbers. Just notice the following, that just with the new service that we introduced back in 2021, just in that particular service that we made to facilitate all this process, we had more than 11,000 registered new companies, more than 3,000 receivers that are reachable through this new platform, and more than 1 million documents transmitted, and we managed to have 170 integrated partners, so ERP manufacturers or ERP implementers that have made connectors to this platform. So that makes us, in Portugal, the market leader what concerns on electronic invoicing, with 52 billion last year of transactions through our network. And we are working with major national companies and cover 100% of our public sector. So if we now look a little bit for the trends that we can see in Portugal, of course, the first one is the increased adoption. So we can see the last 3 years continuous growth of national-wide of the electronic invoicing. And we can see that there is predominance of integrated solutions. The PDF, of course, still very significant, but more and more companies look for solutions that can really solve the problem and reduce the time and cost associated with this process. When it concerns to B2C, PDF may be a solution, but when it concerns to B2B or B2G, PDFs have the same kind of problems as paper invoices, as it will require manual intervention in the process. And connected to this integration solution is the interoperability. So safety in Portugal has a big presence, but even though we have interoperability with more than 30 other players in the market in order to enlarge the reach of our network, so that one of our customers can reach any of his customers directly through the safety network or through any of our competitors in the market. But in addition to that, there are open networks, interoperability frameworks like PEPL and BPC that are also gaining more and more relevance in this market, and where Safety Sovos is present also. And finally, this will reach also the B2B. So the mandatory that is already in place for the B2G sector, it will also become mandatory for the B2B. This is a global trend, and in Portugal is not about if it will be, is when it will be and which model it will be. As Christiaan will show you, there are several models implemented around the world, and we believe that this will also be a reality in Portugal sooner or later. And from my side, it's all. Now I'm passing to Christiaan. Please, Christiaan.
Sorry, I needed to turn on the microphone before I did that. Thank you, Fernando. Can you just confirm that you can hear me and also that you can see my screen?
Yes.
Thank you. Okay, so for the second part of this presentation, we will start with a little bit higher level introduction and imagery to wake everybody up. I think you will find that what I present is very much consistent with the view of what's been happening in Portugal. And Portugal has been, of course, not just a leader in Europe, but I would say among the few countries in the world that have been adopting both electronic invoicing related tools for B2G, increasingly similar legislation for B2B, and also the Saphety related legislations. Portugal was, of course, the first the first OECD country to implement Saphety. So from that leadership position, or one of the pioneer position in the world, we're now going to zoom out, and I think it's an appropriate moment to sort of say we've been, as Sovos, of course, now very happy to have the safety team and the teams in Lisbon and Porto in Portugal as a very important axe within our development in Europe. We also have had a tremendous experience over the last almost 20 years in Latin America, and as many of you will know, Latin American countries have really been spearheading, particularly the development of different forms of electronic invoicing over the last 2 decades. So Europe, sometimes when I go to countries like France and others that are now in the middle of reforms towards electronic invoicing, we'll talk about that a little bit more in a minute. I often make me laugh a little bit because people sit around in these committees and they talk about it like they just invented it. But in Brazil, in Mexico, in Chile, and other countries in Latin America, electronic invoicing has been around for 2 decades already, and very much, the daily reality for companies and the tax administration. But if we zoom out from that experience of 2 decades of supporting businesses with all of these different tax frameworks and public sector imposed frameworks, we kind of see we see an important friction that is something we should every once in a while just pause and think about, which is there are 2 parallel digital transformations that are happening. One of them is businesses, of course, have been using the tools of the internet and associated technologies now for 3 decades at least, to get better efficiencies in their business processes and to access more markets, which ultimately is in the pursuit of value for shareholders and communities. What you see on the other hand is, of course, governments who, frankly, in many cases discovered these tools a little bit later than businesses, but have since been investing a lot of money and driving a lot of change in local economies and societies, using these tools for their own digital transformations, but in the pursuit of enforcing borders, enforcing laws in general, including, of course, very importantly, tax law, and increasing controls, provide better public service, etc. And these 2 digital transformations, although ultimately they use the same tools, are very much in competition with each other in day-to-day reality. And this, of course, finds its probably most extreme expression in the implementation of electronic invoicing and tax digitization, to a point where what we see in reality is that if we receive an invoice, request for proposal or request for information that says electronic invoicing on it, even 10 years ago, certainly 15 years ago, 100% of those RFIs or RFPs from companies would be about business benefits. So, key performance indicators and objectives that were all about making relationships with suppliers and buyers and business processes better and more efficient. Whereas nowadays, 100% of those RFPs and RFIs are about compliance. We do not simply find any expressions of need from businesses anymore that are about, hey, we want to make our business processes better when the topic is electronic invoicing. So the government side of this equation has taken on a tremendous amount of importance in a relatively short period of time, whereby e-invoicing used to be a business process. Nowadays, it's viewed primarily through the lens of compliance with law. Now, if we talk about tax digitization on a high level, we kind of see 2 trends, and you will recognize these from the presentation about Portugal as well. One of them is what we have started calling continuous transaction controls, and those are often coupled with mandatory electronic invoicing. We'll talk a little bit more about this in a minute, but essentially this is all about the giving governments direct insight, and I would say, governments seeking to come to a situation where they can monitor actual business transactions from the source data of those transactions being transmitted to them and sometimes pre-approved in real time by the tax administration. So ultimately, this is very much about fighting fraud in value-added tax and similar consumption taxes. But another way that you will find this in reality is that it kind of changes the whole enforcement game, in the sense that what previously was and still is in many countries sort of the monthly routine of filing a tax return will change over the coming years, in the sense that the tables get turned on businesses whereby this real-time pre-approved source data from transactional systems will be used by tax administrations to pre-fill tax returns. I'll come back to this because this is quite an important addition to the change in operational practice. It isn't just about electronic data interchange. It's actually all aimed at changing the reporting situation very drastically in terms of the enforcement of value-added tax. But an accompanying trend to this is the use of the standard audit file for tax, which will be very familiar to the audience in Portugal. Some people call this as a family, as a trend, e-audit or e-accounting. But the important thing here is to say that after Portugal introduced this as a pioneering country, quite a few other countries have followed. This is a trend that is very strong, and we believe, as I said, it's kind of the other side of the coin, whereby tax administrations also want to get access to the core systems and the accounting system information, the financial systems information, which is really an expression of how companies treat the transactions from the C2C world in an accounting environment. So really get the two views of the world, the actual source transactions and the expression of those transactions in accounting systems at the same time. We'll come back to what that means, but as I said, the left-hand side of this equation, the transactional side, the continuous transaction controls and e-invoicing, are very much about consumption taxes like value-added tax. Saphety is a much broader concept, which is designed for the enforcement and optimization of all taxes, including also direct taxes like corporate income tax. Now I want to introduce something that happened in December last year, and if you are not familiar with it, let me just quickly talk you through an initiative on the European Union level called VAT in the Digital Age. What the European Commission has been seeing for some time now is that countries like Portugal, but also countries like Spain, Italy, Hungary, and many others have been moving towards different forms of tax digitization, including continuous transaction controls, or edging towards some form of electronic invoicing and Saphety or digital reporting. But in very different ways. Greece and Spain, for instance, have two relatively mature mandates in these areas that are completely different. Actually, there are no two countries in Europe that have a similar path towards the digitization of VAT specifically. So the European Commission wanted to do something about this, did a report about a year ago on the different models, the pros and cons of the different models. And in that report, it kind of sketched out 4 different high-level policy options that the European Union could choose. They range from doing nothing, which is of course politically very easy to do, but probably not great for the European internal market, to the most extreme form of harmonization, whereby everybody's forced to do the exact same thing, and 2 versions in between. Now, usually when the European Commission lays out these different types of policy options, they will aim something that is to slightly to the right of this equation, so a little bit aggressive in terms of harmonization, and then usually the negotiation in with the member states leads to something that lands nicely in the middle. So it's politically feasible, but it still provides quite a bit of harmonization. The VAT in the Digital Age proposal came out to almost the extreme end of these options, and I'll talk a little bit more about what that means, but it is quite remarkable that the European Commission has gone for a very aggressive, a very audacious introduction of continuous transaction controls, very much inspired by Latin America, in the European Union. So this is going to introduce a massive amount of change that I'll talk about a little bit more. But first, how could this happen politically? Well, the first one is that the UK is no longer part of the European Union, and the UK has more of a common law as a different way of looking at the enforcement of law and at law in general, the UK used to have this very liberal view of the economy, whereby monitoring of transactions was never really discussable. That has changed, and nowadays France and Germany are the biggest member states that are in the lead. So since Brexit, it's become easier to develop these kinds of schemes. But of course, also the pandemic, COVID-19, changed this quite a lot as well, and digitization of the economy and resilience of the economy and using standardization, interoperability of digital tools has become a much bigger theme, because we all figured out during the pandemic that standardization wasn't yet great, as we were working all from our kitchen tables. So these two political developments have made it possible for Europe to do the following. The VAT in the Digital Age proposal, you will hear people talk about VIDA, has two key dates. I'll talk you through the proposal just very quickly. The first one is that in 2024, the definition of an electronic invoice changes. You've heard it already from Fernando. In Portugal, there's a similar trend whereby the definition of an electronic invoice becomes that of a structured invoice. So the European Commission really wants to force automation into the European marketplace. The other thing that happens in 2024, if this proposal is adopted, because it's still a proposal, is that member states of the European Union will be completely free to make electronic invoicing mandatory. They're not free today. They have to ask for a derogation, a specific approval. Fast forward to 2028, the foundation here in terms of the definition takes one more extreme step, which is e-invoicing becomes the rule. So by 2028, the European Union will assume that an invoice is an electronic invoice and therefore structured, which also means that if any member state still wants to accept paper or PDF invoices for VAT purposes, they need to explicitly make that exception in their law. Right, so we go from e-invoicing being an exception to e-invoicing being the rule. Then within the specific use case of cross-border transactions in the European Union, which lawyers call inter-community supplies, the European Commission is imposing near real-time reporting in the member state of each of these, the supplier and the buyer, each in their member state, with real-time or near real-time reporting and mandatory electronic invoicing based on what is called the EN, the European norm. And that becomes quite an important foundation for the final step, that the European norm is the underlying minimum standard that everybody, the governments and the businesses in all of the member states, need to support for the electronic invoicing and electronic reporting. Now, the one thing that VIDA doesn't do is mandate electronic invoicing for domestic transactions. But of course, with all of these measures, what the European Commission very much is hoping for is that domestic mandates for electronic invoicing now become almost inevitable. And what that will do is that it will create this tsunami of mandates, so there will be a huge acceleration of mandatory electronic invoicing and different forms of real-time or near real-time reporting now in the European Union. It will spread also to countries, neighboring countries, and politically aligned countries around the world. So VIDA is quite a compelling, important thing that will drive this acceleration. By the way, it accelerates something that was already a very active world of different countries in the EU implementing mandatory electronic invoicing or different forms of real-time or near real-time reporting. So these famous continuous transaction controls. Now, if we look at our global practice as a vendor, I just want to say, this is not just business as usual, right? This is just a slide showing some of the complexity on a very simple set of access of the different mandates that are now coming up, as just a couple of examples that we are working on. The actual research categories that we use to compare these countries and implement these countries on a common basis is more than 200 categories of questions we ask ourselves across every single one of these mandates to make sure that we can help our customers. And what you should realize is, of course, that all of these permutations are also a moving target, because things change tremendously quickly in each of these countries. As you've seen, Portugal is by no means done with its mandates, and every single country introducing these laws will change for a decade or longer quite dynamically, and all of these changes need to be made. Now, the other thing to say, and this is also familiar to the Portuguese audience, of course, is that it doesn't just stop with invoicing. Transport documents, delivery documents, payment notifications, factoring, salary slips and other types of information also in many of these countries increasingly is added to these continuous transaction controls. This chart here just shows some of the countries that also have transport documents as part of their mandates. We're now seeing some regional flavors appear in continuous transaction controls. South America has been very focused on the pre-approval, the clearance of these invoices. They also have forms of continuous reporting. But in Europe, and as you've heard, Portugal is of course also here a front runner. The public procurement philosophy, and you've heard Fernando talk about PEPL, is a very important aspect of inspiration for electronic invoicing mandates. And that inspiration has blown over to Asia as well. And here you see that a lot more of the mandates in Asia, you'll see this coming up in Europe too, there's more emphasis on the actual transaction. So very importantly, in Latin America, the transaction between the supplier and the buyer is usually not regulated. We're seeing Europe and Asia going towards a model whereby it's not just about the reporting of the invoices, but also regulation about the actual transaction between the supplier and the buyer and the interoperability of networks. That basically means that if you look at what is happening here on a global level, is that the front runners, the pioneer countries in Latin America, primarily were focused on taxes, optimizing taxes. A lot of countries now in Europe, and the European Commission, particularly with VIDA, and countries in Asia are kind of combining this fiscal objective with an objective that is also based on, hey, let's use this standardization to improve our local economies through more automation, particularly automation for small and medium-sized companies as well. Now, of course, the bridge between these two objectives is that data quality improves through automation, which benefits fiscal controls too. I'm going to talk you very quickly through or summarize a little bit this world of different e-invoicing models to give you some keys as to how to understand the terminology. In Latin America, you have this continuous transaction controls models that is very based on what people might think about EDI with the government. So the actual transaction between the trading partners, which is represented here through these two black circles, is unregulated, but there is a lot of regulations and automation in transaction between taxpayers and the tax administration. In Europe, while Latin America from the beginning of the millennium was automating their transactions this way, in Europe there was no such legislation, and you've heard Fernando talk about post-audit. So you could actually use digital invoicing in Europe since 2001, but there was no state intervention in the actual transactions. There was no continuous transaction controls historically in Europe. So a lot of EDI, which is a two-corner model, and three-corner models whereby procure-to-pay and order-to-cash cloud platforms were implemented with proprietary networks around that for large buyers and suppliers in the economy. They could kind of develop freely in the European Union since the beginning of the millennium, because the legislation didn't impose anything else. But then what happened was that Italy, which has a problematic fiscal profile in the economy, took inspiration from the Latin American models in 2019 and implemented something that is a centralized model. So they actually took the Latin American model one step further, whereby the tax administration doesn't just want to receive data in real time from transactions, but actually becomes the transmission platform for these invoices as well. Very radical step, by the way, that also was taken in 2014 in Turkey. This PEPL model, the interoperability that we've talked about in this presentation a few times now, is based on what's called a four-corner model, whereby the trading partners basically each have their chosen service provider. It's called an access point in this methodology. So every company, every taxpayer in the economy ultimately has to choose a minimum of one service provider, but that service provider operates in a framework that allows interoperability, discovery of trading partners, and the free flow, the seamless flow of invoices to any other trading partner very easily through regulated interoperability, which is called the four-corner model. The four-corner model was implemented, actually, interestingly, also in the US, not so much for tax purposes, but there is a large initiative underway to do this in order to facilitate electronic payments. The next step that you will hear a lot about, and I think France, the continuous transaction controls in France, the electronic invoicing mandate that will become mandatory from July next year, is a first manifestation of a five-corner model. The five-corner model is kind of the best of all worlds in many ways. It's the four-corner model that I described earlier, but with the reporting being done on behalf of taxpayers through these access points that interoperate with each other for the transaction. Now, what this drives, though, in the marketplace is an interesting development whereby, of course, as I said, compliance and the compliance with all these different B2B, B2G, VAT, Saphety, etc. rules will take on an even greater importance as we move through time now with VIDA and everything else. This tsunami of mandates that is coming up in Europe and in Asia and in Africa and everywhere else in the world, even in the US. We also see that, of course, procure to pay and order to cash business process applications will continue to be very, very important in the marketplace in order to gain at least some business benefit. But the service providers in the market and the networks that you see out there that are closed, that are not driven by interoperability, but that are very much taking advantage of monetizing the lack of harmonization in the law and in technology, are really the ones that are probably going to diminish in value, because standardization, because of the law and these frameworks like PEPL, are driving a lot of that friction out of the proprietary networks and open it up for smaller companies to have a lower threshold to participate in the automation in the economy as well. Now, VIDA, VAT in a Digital Age, leaves one big question unresolved, and this is quite important. We've talked about this three-corner model that was launched. It was piloted in Turkey in a way, implemented in the European Union in the first time 2019 in Italy. Now also Poland and Romania have adopted it. So we have 3 live examples already of a centralized model whereby the tax administration is the transmission hub. We have one example, as I mentioned earlier, of this more enlightened next generation 5-corner model, and that is what is being implemented, as I mentioned, in France. Right, so even though we talk a lot about interoperability and networks, this centralized model whereby the tax administration is the mandatory, monolithic, monopolistic hub for everyone in the economy actually has a lot of, is very popular with a lot of member states in the European Union. The big question is, how will this evolve? Will it be an open model with 5 corners, which is distributed and more probably better for a future where we want innovation? Or will it be a model whereby most of the member states will look like Italy, where the tax administration provides a very boxed service, which probably means less freedom for businesses to develop their supply chain automation models? I will end with this picture here. If you think about this from a corporate perspective, you will see across the board different reporting requirements, as I mentioned. So in your transactional systems, B2B, invoicing, transport documents, payment data, both in your relationship and the applications you use with your suppliers, but also the similar requirements in your relationships and the applications and processes you use to automate your interactions with your buyers, and your core systems and your particularly ERP systems that still need to be able increasingly to output structured data over very large masses of data, master data, accounting data, etc., to the tax administration, either on demand or as a periodic report as well. All of this network interoperability legislation comes on top of that across these different categories, right? So you'll be reporting more data from more systems as a result of VIDA and everything else, but you also need to take into account legislation in your interaction through this legislation and these frameworks like PEPL and B2G interoperability that are coming up. The tax administration will use all of this increasingly, as I said, to triangulate all this data, high quality, granular source data, and they will be using this to pre-fill VAT and corporate income tax returns, as you see already happening in some of the pioneering countries. I will finish with this. In Europe particularly, of course, one of the big frictions, one of the big questions that we see a lot of our enterprise customers at least struggle with is, as a lot of these mandates come into force, what do I do with my pre-existing applications for procure to pay, for order to cash, etc.? This is a big, important question, of course, right? There's a lot of vendors out there in the market that provide very monolithic systems. You have to use their model for the exchange of the invoice. There's not a lot of room for adding business processes onto it. We at Sovos, of course, and with people like Fernando leading our product development, are working very hard to make it possible for businesses to get the best of all worlds, to be able to take advantage of different types of process automation and the regulated frameworks and the reporting, all in a completely transparent manner, so that you can really be compliant, but also in many ways benefit from the legislation that makes it easier to interoperate with your business partners. So I hope that this quick overview has given you some insight into the complexity of what's happening in the world, where we're heading, and also where VIDA, Vet in the Digital Age, is going to create a new momentum in the European marketplace.
Thank you.
Thank you very much.
Thank you, Christiaan. Thank you for sharing your knowledge, and thank you all for assisting, and hope to see you on our next webinar. See you soon. Thank you.
Thanks, everyone.